The stock markets are seeing red today. The economy is down right now. What's happening? What is this all about? Well, I'm going to give you the news that you need to know. The first thing we are going to talk about is what's happening in China. This continues to unravel, but there's an economic indicator that may be starting to flip, and that is potentially positive for the global economy. Stay tuned for that, okay? The second thing I want to look at is lumber. What happened? It was up, it was down, and now it has been skyrocketing, okay? All of this connected with the supply chain and a lot of information surrounding that. I've got it for you, okay? The third thing we need to look at is CATHIE no bubble. All right, yes, Cathie Wood, bubble, no bubble. What is it? She's got some words about that. And if you stick with me until the end, we are going to talk about candy canes. Yes, you heard me right. Let's begin. As I record this video, you are looking at China in their circumstances, this one in particular, sending a signal to the markets as they see red. Okay, it is, to say the least, not looking very good. But you could see that China's central bank cuts a benchmark rate for the first time since 2020. The People's Bank of China lowered the one-year loan prime rate to 3.8%, down from 3.85%, and essentially just showing you that they are starting to reduce. They are starting to ease up on their policies. Not a dramatic difference, but certainly that's what they're showing us. And what does this tell you about the particular circumstances? I mean, I could look at this, the broad markets here, just showing you as an example, whichever one you want to look at. This happens to be the SPY. Of course, the market isn't open as I record this, but to give you a little bit of insight here, as of November timeframe, up until now, they've been chopping around. This market has been chopping around. Asian stocks, particularly when you look at what's going on in China, they've been beaten up for a while, particularly Chinese tech stocks. And it seems like every week there's something new on top of this, regulating that and shutting down this, and it is not looking good. So we are kind of in the middle of this all. There's so much more here that I need to unpack, but let's look here further, just showing you the main interest rate for loans cut to help the economy. What is China doing? Well, they're starting to reduce. They are starting to cut. They are starting to stimulate. But what were they doing, let's say, a few months ago, 6 months ago, around that time frame? Well, in fact, it looked like they were tightening, if anything. If you go back even to 2020, what were they doing? While everybody else was easing to a level we've never seen before, China did the reverse, it seemed, at least the public information. And they went in a different path. And why? Because things were overheating. And while all these other countries said, we want it to overheat, that's the goal, China said, we are going to do something different. Very unusual, very unusual. And now they flip the other direction at the exact same time that you've got central banks like, the Fed. There have been numerous countries that have gone the way of tightening, whether that is reducing the amount of money they print or whether that's increasing interest rates. They're seemingly literally on the exact opposite. To me, this is questionable. If you do agree with that, hit the thumbs up button. If you think something unusual is happening right now today, simply hit that thumbs up button. It's right down below. Chinese estates plunges by record after privatization collapses. Shareholders rejected offer by longtime ally of Evergrande. This Evergrande fiasco doesn't stop. It doesn't stop. Okay, this particular stock, it plunged as much as 35%. People had said that, oh, you don't need to worry because it's just one company. They're gonna bail it out. Please, we need to tell these individuals to get wise. It's not just one stock, it's the entire property sector. Now, this is the big one. I covered this many times before, and still, oddly, it's not out there. People don't know enough about it, and that is the China credit impulse. What is the China credit impulse? Well, quite frankly, it's just the amount of money being, loaned out into the system. That's all. Okay? It's as a percentage of the GDP, but how much money is moving out? And you could see this line, of course, being 0, so anything lower would be a contraction. And we saw that happen. I talked about that. It was throughout the period, you saw the contraction happening, okay, right here. And it just told you that we were in for a little bit of a change, to say the least. Now, I don't know you go back in history, whenever China decides to go in this direction of an increase, okay, the amount of money that they're pumping out into the system, it tends to be very positive, not just for China, but for the whole world. Remember, this is not quantitative easing. This is money being loaned out into the system. Of course, you increase the risk when you do that. It's not like it's not without its risk. But this is the way the cycle's been working. And why is China so key? Why are they so important? By the way, let me just point this out before I start this rant. Just look. Morgan Stanley showing us the potential, we don't know yet, that this has bottomed out. Historically, it looks like, roughly about where they would normally intervene, that this would be turning up. If that is the case, this could be positive. Now, why? Why is that the case? Well, you look at it. China consumes so much. If you're in Chile and you've got copper to sell, China wants to buy it. If you are in the United States and you've got soybeans to sell, China wants to buy it because they can't produce all of which they need. So they have to go around the world and start to spend their cash. It needs to be loaned out through the businesses, and the businesses need to buy products. They need raw materials. They need services, whatever it might be. And if their own country can't supply it all, well, then they need to go out and essentially look for alternatives. Okay, and that's what this is all about. That's why it's so key to understand. There's talking about CATHIE and Shimao and all these different companies that are going under right now. Okay, there's every day I'm seeing articles. I don't cover them every day, but that's what's happening. And what about India? India's benchmark index rose over 20% in the first 10 months of this year, aided by the central bank's efforts to pump liquidity into the economy. But it's dropped nearly 8% from an all-time high touched in October, partly on expectations that interest rates will rise amid a pickup in economic activity and inflation. Same story as everywhere else, okay? And I just wanted to mention this because I know that I have many subscribers in India. And of course, there's a lot of talk about India and the long-term prospects. This article, however, was basically just talking about retail investors getting in. There's one particular individual who doubled his money from last year into this year and is pushing his whole family to invest in the stock market. And of course, up until this point, things have done well. But of course, there are some changes today. The growth, in fact, from the markets came early on in 2020. And now things have really been rocky, to say the least. Speaking of rocky, sky-high lumber prices are back. Builders are buying wood while floods in British Columbia limit the supply. So essentially supply and demand fundamentals. There are problems on top of that, of course. But lumber, what happened? We had it rocket up to 1,700, went down to about 450, and now it is nearing 1,100. It wasn't just, we are going towards a deflation. There's so much more to the story than that. A lot of these different commodities, a lot of them are on the rise. Some of them have come down. Okay, there's no doubt about that. And we need to follow this because it gives us a little bit of insight as to what's happening. If the price of certain commodities are continuously rising, what does that signal about the demand? There's supply chain problems and this and that, yes. But we need to focus on where the demand is. Is it real demand? Is it there? Well, we can get we can gauge that somewhat within, different pieces of data. I will cover that for you. This was interesting, actually. Supply chain mess threatens holiday sales from hot sauce to board games. Manufacturers facing the backlog ports, scarce materials and components, and worker shortage. You've heard it all before. But just to see how this one individual making these simple little toys suddenly has a problem accessing everything. In fact, he picked up a U-Haul to go get the goods and bring them. Okay, this is like, we've never seen anything like this before. And you waited to this point here, my friends. Candy cane shortage. Candy cane shortage. I mean, have you ever heard of that? Have you ever heard of that? I mean, things are so wacky today. We've only received half of our candy cane order for the holiday season and sold out almost immediately. We currently have 0 in stock. How many times have you heard that before? 0 in stock. All right. Let's just turn to the fun stuff. CATHIE No Bubble says innovation stocks are in deep value territory. Yes. If you want, you can read it directly from ARK's website. Innovation stocks are not in a bubble. We believe they are in deep value territory, according to Catherine Wood. There's some pretty funny stuff in here. Essentially just saying, if you don't, if you don't invest in our company, if you don't agree with me, well, then that's all on you. You are the problem. You are the issue. And I am right and you are wrong. I mean, it's just funny. Nobody knows. Nobody knows what the future has in store. Nobody knows. Not you, not I, not Cathie Wood, not Warren Buffett. Nobody knows. But we need to try and get some level of certainty. And how do we do that? Well, we have to look at what our goals are. That's the first thing. Okay, if your goal is to preserve your wealth, well, your actions are going to be a lot different than somebody who wants maximum appreciation. Maybe they're one individual and they have no bills whatsoever, and they're 18 years old, and different story. It's a very different story. So when I see this one size fits all kind of mentality, it is not accurate. But that doesn't get the clicks, and it doesn't get the views, and it doesn't get all of the popularity. So, that's where I'm at. But anyway, so for you as an individual, look at what your goals are, figure that out, write it down on paper or in your phone or something, and actually try and sit there and say to yourself, now, what do I got to do to get to these goals? What can I do? Put it all down on the paper. Write it down. Somehow get that down. I'm telling you, it makes a big difference. And when you do that, you're going to start to think, okay, well, if I was going to do that, how could I do it? And start to make that happen for you, for yourself, for your family. Because things are certainly topsy-turvy, to say the least. All right? So if you appreciated the message, hit that thumbs up button. Thank you for supporting me and this channel. And if you haven't seen this video yet, you definitely want to check it out, all right? So just click it, and then I'll see you there.